Hello everyone. So today we are going to begin a new topic, that is merchant banking. So this particular topic is very important for SEBI grade A exam, both for phase 1 and phase 2 perspective. So today we are going to discuss some important questions relating to merchant banking. Now before moving to the questions, I would like to enlighten you a bit about merchant banking. So we have been hearing this particular topic of merchant banking since long, but merchant banking basically refers to the services which are meant basically in order to raise funds from international market. You can say that the Indian company wishes to raise some funds from the foreign market, it can take few services, or you can say different services from these merchant banking firms, and the services could be your raising funds, your advisory funds, your portfolio management, as well as your underwriting services. So these are few of the services provided by merchant banking firms, and these firms charge quite a huge amount of money in order to give these services. So this particular topic is very important, and today we are going to deal with some important questions. So let us move ahead and have a look at our first question for the day. Which of the following banks provides underwriting services, fundraising services and financial advising services? So I have just enlightened you about this particular topic. So let us have a look at the option. First is your foreign bank, second is your retail bank, second is your merchant bank, and D is your central bank. So I hope that you are very clear about the functions of retail bank, central bank and foreign bank, and I have just told you that merchant bank provides you services for international finance related to underwriting services, your fundraising services, as well as your financial advisory as well. So in this case the clear cut answer is C, that is merchant bank. So let us move ahead to the next question. Which of the following is not one of the functions of merchant bankers? Now this particular question is very simple, asking about the functions of merchant bankers. So this could again be related to what we have just discussed in our previous question. So just move ahead and have a look at the different options. The first option talks about portfolio management. So portfolio management is a task where you make a portfolio out of several securities. You use a bunch of securities, you can say, and you make a portfolio, and the management of this particular portfolio is given to the asset management company, or you can say the merchant bankers will be looking after these portfolios and will be taking care that the adequate return is being generated as per the objective of investor. Second is your corporate restructuring. When we talk about corporate restructuring, it is basically all those functions relating to your mergers and amalgamation, you can say. So all those legal formalities, as well as your bidding process, as well as valuation, so whatever functions are being performed for mergers and amalgamation comes under the function of corporate restructuring and is well undertaken by the merchant bankers itself. When we talk about the third option, that is advisory services to the government. Now this is quite a tricky question, and you can say this particular option is not very suitable because the government is not very open to taking investments, or you can say not in the sense of investments, but is not very open to taking advices from these private merchant bankers due to lack of you can say lack of trust, or you can say because national interest is being involved. So we have also read that the advisory to the government is basically the central bank relating to all matters, or the government in itself has various ministries, be it the finance ministry, be it the education ministry and different other ministries, in order to guide them to take any major decisions relating to the macroeconomic policies. So it is generally not very open to taking advices from these private bankers. Moving to the fourth option, revival of sick units. So yes, merchant bankers also takes a good initiative in revival of these sick units, such that these units could be made functional and could generate adequate returns to the economy. So the owners of these sick units comes to the merchant bankers in order to raise various kind of services, and finally they finally take up the steps in order to revive these sick units. So in this case, the third function, that is advisory services to the government, is not one of the functions performed by merchant bankers. So we have to be careful and we have to understand all these options before answering the question. Moving to the next question for the day. Which of the below mentioned led to the separation of investment and commercial banking activities? Now here I would like to enlighten you about these particular activities, that when we talk about the commercial banking activities for the normal banks, that is your be it your Punjab National Bank, be it your SBI or any other banks, so these banks are majorly related to the commercial banking activities, that is acceptance of deposits and your raising loans, you can say acceptance of deposits along with your loans and advances are the two main functions, you can say, performed by these commercial banking activities. But when we talk about investment banks, these are majorly involved in functions such as underwriting, advisory or fundraising services. So a particular act was being mentioned, or which came up, which separated the investment and commercial banking activities in order to prevent, or you can say prohibit, the fraudulent activities. So we have to identify the particular act. So in order to know about these acts, you have to know that what is the objective of different acts. Let us have a look at the option. The Dodd-Frank Act, the Glass-Steagall Act, the Securities and Exchange Commission, or your SEBI Act 1992. So now, first of all, your SEBI Act 1992 is related to a governing body in India for the securities market. This we already know. So there is no such regulation coming up from this SEBI Act 1992 that separates investment and commercial banking activities. So this is not our answer. When we talk about Securities and Exchange Commission of India, this is the commission, or you can say the regulatory body in US that is similar to SEBI, looks after the securities market in US. So again, this particular commission is not the commission or not the authority which has separated or segregated the investment and commercial banking activities. Now, when I talk about Glass-Steagall Act, Glass-Steagall Act is an act that came in the year 1933 after the Great Depression in the year 1929, and it proclaimed that since there were a lot of depression coming up due to the fraudulent activities being exercised by these banking and other investment making firms, thus it separated the investment and commercial banking activities. So Glass-Steagall Act is the act that separated the investment and commercial banking activities, and it came up in the year 1933. So this particular act is very important, and it came with US. Also, you must also know that what is Dodd-Frank Act. So the Dodd-Frank Act is again a regulatory act in US that came in the year close to 2010 by this was brought by Obama after the financial crisis took place in the year 2008. So this particular topic is very important from the perspective of merchant banking as well, and from the perspective of international finance as well. So you need to know that when these acts came up, and simultaneously what was the purpose or the objective of enactation of these acts. So let us move ahead to the next question now. Which of the following are not one of the money market instruments? So as we have already discussed before, that money market instruments are those instruments which are traded for a very short period of time, ranging from you can say from 1 day to you can say 1 year, or you can say from 1 day to 365 days. So this is generally the period of money market instruments. So we have to identify that which of the following are not one of the money market instruments. So treasury bills. So we have already heard about treasury bills a lot. They comes in a package of 91 days, 182 days and 364 days, and government raises funds by using such treasury bills. So this is one of the examples, and this is definitely a money market instrument since it is ranging from 91 days to 364 year, that is within the limit of 1 year. When we talk about commercial paper, it is unsecured promissory note, promissory note you can say, and it is meant to raise huge fund for loan purposes you can say, and it is usually exercised by net worthy individuals, or you can say net worthy institutions. So again, the time for this is very less, that is between 1 year itself, within 1 year. So again, this is one of the money market instruments. Now we have talked about bonds, that bonds are basically long-term financial instruments. So this will not come under the purview of money market instrument, long-term financial instrument. And when we talk about certificate of deposit, this is generally a certificate which you get after submitting your money to a particular institute, where it is a form of saving certificate you can say, where you are submitting your savings basically, and you will be getting a fixed return on them, and you can also you can also redeem your particular deposit. You can give your certificate back, and you can claim your deposits after a fixed interval of time. So this is again a short-term instrument where you are willing to earn some interest on your savings. So this is again a money market instrument. The correct answer in this case is bonds, since the time period of bond is usually greater than 1 year, let's say 3 years or 5 years, and you get a periodical return in the form of interest. So this is not one of the money market instruments. This is a capital market instrument as well. So moving ahead for the last question. Lease is a contract between the lessor and lessee, whereby the lessor allows the use of a specific asset such as equipment by lessee for a certain period. The lessor charges a fee called. So this is about a lease contract. We can also talk about lease is covered under AS 19. that is accounting standards 19 in terms of accounting, also in which there are two people, that is one is your lessor and the other is a lessee. So we can take an example to understand this particular term. So let us say that lessor A has a machinery X and lessee is B person B, and he is willing to purchase this particular machine, say X, for his production purposes. Now, in order to save this infrastructural cost, or you can say investment cost of purchasing this particular machine, he takes this particular machine from A in the form of lease and tells him that I'll be giving you particular service, or I'll be paying you certain fees, and I'll be using it for say 3 years, and after being used for 3 years, I'll be returning you this particular machinery back to A. So in this case, the machine gets transferred to B for a particular period of 3 years, and after 3 years, it comes back to A. So during this period, the lessee has to pay certain fees. So we have to tell that what is the particular fees known as. So let us have a look at the option. So the first option is royalties, the B option is rentals, the C is premium, and the fourth is dividend. So these terms are self-explanatory though, but royalty is something that you get after you have published a book or some literary work. So on selling of those books, you get a royalty, or also on patents as well, you receive royalties. So that is all about royalty. So royalty is not our answer. When we talk about dividends, you get when you are made investment in the form of shares. So at the AGM, the dividend is being declared by the board of directors with the approval of shareholders. Then you earn returns. So that is dividends. When we talk about premium is something, an excess payment made for anything. So it could be in the form of securities, that when securities are issued at a higher price greater than the face value, the excess of face value is known as premium. So again, premium is not the term for the answer. So basically rentals, or which is also known as lease rentals, is the amount that is paid by the lessee for purchasing, or you can say for using the services of this particular machine in our case, and hence lease rental is the correct answer for this question. So I hope this particular topic of merchant banking would be useful to you for your exam, and these particular terms are very relevant, and first you need to understand these concepts in order to answer these questions. So please go through these topics very carefully. Till then, thank you.